Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Today is October 7th, 2025. It's supposedly a day that we are going to hear about an aid package to U.S. farmers. We'll talk a little bit about that as well as the implications for grain marketing. But as always the case, we want to start with the call to action. What should we be doing right now? Hope harvest is going well. I know most of you are in the middle of harvest, so let's start with the recommendations, and we also have some talking points before we jump into the analysis. Check that box, no action recommended this week. And it's a lot of, let's let the dust settle before we make our move. Let's let the market play its hand, and then we'll adjust accordingly. But I do want to mention a couple of these talking points. Number one, farmer aid. As is the case, maybe by the time you get this video or watch this video, we will know about the package. But as of right now, what we seem to know, or what it indicates, is that we're talking about a package of probably between 10 to 14 billion. Then we also have an issue of when will this be paid out and how will it be paid out? And I actually think beyond just the size of the bundle and the distribution, which is absolutely important, the timing of it really affects farmer decisions a lot. When you get a check can be almost as important as how big of a check it is. And I mean, it's not the same, but you know what I mean. So hopefully we'll have more details on that. When we have a big unknown like will there not be a bundle, then we kind of feel paralyzed, right? So a lot of today's video is just going to be kind of working through what we know and what we don't know. And then based on what we know, can we take decisions or can we not? Should we just wait? The next item would be the government shutdown. One thing you'll notice real quickly here in today's video is that we don't have updated COT reports. So we don't know the position of the funds. I always feel a little bit apprehensive, almost tempted to put on a tinfoil hat when we're flying blind, so to speak, when we can't watch the money moving. And that comes from, I believe it was 2013, but there's been one or two times where we were flying blind, we didn't know the position of the funds, and they did something big. Like they left the market kind of, and then all of a sudden we get it published. It's like, okay, 2 weeks ago, party was over, but we didn't get to see that in real time. So we just saw prices falling, but we didn't know what happened. So anytime we don't get to track the position of the funds weekly, for me, it's just kind of one of those things. I just get a little bit on edge. Maybe that's just me overreacting. maybe, like I said, it's a tinfoil hat, but we have a government shutdown and we can't see the position of the funds, at least for now. So that's just one thing that I'm just a little bit cautious about. They could go accumulate a huge long position that could push prices up. They could go the other way. It's just right now, what seems to be the case right now is they're not really buying or selling. They're not really rocking the boat, just basically based on price action. We haven't really seen significant move one way or other. If this lasts longer, obviously the shutdown can impact any type of program that will be paid out, depending on how it'll be paid out. The shutdown will impact our, USDA reports. So how long this shutdown lasts will possibly have other implications on payout, on USDA reporting. But what we're feeling today, at least what I'm feeling today, is just, okay, no position of the funds. And if it lasts longer, there will be other, probably even bigger things to look for. Supply and demand, that's the third thing. I think of bullish and bearish markets a little bit differently. Usually we think, and this is the right way, right? Bullish markets are upward trending, markets that are going up. Bearish markets are markets that are going down. And all of that is absolutely right, okay? So maybe there's even another term that would be better than bullish and bearish. But the way that I typically think about it isn't in terms of, are we going to have downward trending markets or are we going to have upward trending markets? The question is, do we have enough grain in the world? Yes or no? And if it's like, man, stocks are pretty tight, then we have the potential of just like auction style, who pays more, this thing can get frantic, and then you can get speculators on top of that, and it can really get, for farmers, it's good, right? Those high prices. But if we have enough grain in the world, it's kind of like grain needs to trade hands, but whoever is the most willing seller will just sell into that market and kind of dump on the market, so to speak. And prices are limited by the most willing seller. So they're typically range-bound trade, and they're typically at a low price level, but we need to get enough grain moved. So, there are typically opportunities, but it's kind of hard to come by. So it's range-bound trade at a low level, and you kind of have to, swing and get enough runners on base and just kind of, really just one run at a time, one decision at a time. You don't get those exciting markets where you wait 6 months and all of a sudden you have a profitable year. Usually it could happen, but so from a supply and a demand standpoint, and this goes to expectations as well, I just think it's important to just say there is a lot of grain in the world. That doesn't mean we won't get rallies. That doesn't mean that prices, we can't survive, so to speak, from a pricing standpoint. It's a really rough time. Probably most days that you wake up, you're looking at a price that is not profitable, and that will very likely possibly be the case. So it's a grind, right? But within that, we really have to be mindful of opportunities whenever they come. We have to make our decisions, keep cash coming in so we stay afloat, just kind of do what we need to do to move the agenda along. So there's plenty of grain in the world. That doesn't mean we can't get markets rallying. They'll just be limited and probably fall off pretty short. And it's just, pretty quickly. If we get a little rally, they'll come down pretty quick and all of that stuff. And then the other thing is the USA farmer competitive advantage. And this is one thing that really shows up from working with different farmers in the world. So the nature, U.S. farmers have a better logistics and better financial sector and higher levels of liquidity than their counterparts in South America. That's just a fact. It is also a competitive advantage. So as difficult as it can be, your decision to should I store or should I sell now is also to some extent a decision of competitive advantage, right? If you have lower cost of storage, if you have lower cost of capital, then the way you can use your competitive advantage is to tuck it away and put it in storage. I'm not saying, hey, for sure we're going to get a rally and for sure we're going to take off and this is going to be a bullish market. I don't know. I don't have a crystal ball, right? Nobody does. But if we just kind of take the decisions one step at a time, we say, okay, if you need cash flow, let's solve that. If you've got your cash flow covered, can you store? Okay, I'm going to store. So, we talked about it in previous videos. Should I do basis contract or should I pay custom storage? All right. So now we've got that decision. If you have on-farm storage, I would say fill the bins and be patient. If you, assuming your cash flow can take care of it. We've discussed this one-on-one in your portfolios. Feel free to reach out if you have any issue. But this is a year where I think farmers in the U.S. need to be mindful of their competitive advantage, which is lower cost of capital and higher liquidity and better logistics. And I think that's something we need to take advantage. So those are my talking points, a little bit of my soapbox, so to speak, here getting started. Not really even really a soapbox, just headlines and things that we have to go over. Now let's jump into the analysis part, then we'll come back to the summary. As is always the case, we start with a market plan. What has to happen to your quarter 4 bushels? How much can we store? We're gonna, put your grain in buckets, and then we're gonna manage those buckets. So we build your portfolio, we manage based on that. And then we have seasonals, funds, which again, market shutdown, government shutdown, no position of funds. That's one that bugs me a lot. And then technical analysis, which we'll go over, and there's some interesting things to look at. Let's start with corn, and let me get the marker here for corn. We'll start with the, you get the color on it. Where is it? Let's just start with black. So we have up here across the top, we have the 200-day moving average. That's that. It's not a straight line. It's coming down. And then here we have the 20-day moving average. And so where's corn trading right now? We are below the 20-day moving average, and that would technically be a downtrend, and it is. However, corn did not fall to its previous lows down here under 4. This is December corn. It fell, just over 410 here, and then it already turned a corner, and it's really trying to get into an uptrend. In this area here, I discussed optional buys. If you had some overrun bushels, I discussed optional buys. I still think there's a decent shot that this corn market, let me clear it out, that this corn market's gonna get in a solid uptrend here and then come test this 200-day moving average that's coming down. Straight, but I think there's a decent shot that that's what's gonna happen. It'll be very interesting for me to see when December corn gets around that, 435 to 440 mark, assuming that happens, how much selling pressure will we have? That's going to be really interesting, because if we could get up over that, all of a sudden then, like I said, let's say that this 20-day moving average comes up and this goes here and we get up over 440, then all of a sudden it's like, oh, we're looking at, this 470 mark, or up here 480, where all of a sudden, or even higher, we're looking at kind of those, oh, let's go make a run. And if we do, then absolutely that's something we want to be ready to pull the trigger on, at least on quarter 4 bushels, right? Again, recommendation matching the portfolio. So for the time being, not overly optimistic, but there's really nothing happening here in this price range. It's just kind of boring. And so what are we going to do? We're just going to wait. We're going to wait. Let the market play its hand. Worst nightmare, speculators come down here and sell this off. But then again, under $4, that's been a buy. Basically every time that's been a buy. So if we get, punched in the chin, lose 20 cents, get under $4, then that's going to be something where hopefully we see some basis respond and we can do something with, or if we rally, hopefully that's something we can do something with. Right now, we're kind of in no man's land. It's a little bit frustrating. And speaking of basis, there's kind of a tale of two corn belts right now. I wanted to compare the Eastern Corn Belt so this is what I typically show is just West Central Indiana, just because it's, my alma mater and it's the Purdue basis tool, because usually basis trends are similar. But there's something a little bit different. If we look this black line, you could see that the current corn basis is above the historic average for West Central Indiana. But I want to contrast that with northwestern Iowa. And I picked northwestern Iowa just because once you get up to northwestern Iowa, that's kind of similar to Minnesota, parts of Dakotas. It's just kind of, big picture. Indiana can pull to the eastern. It's not quite as extreme as like Ohio, but it pulls east and it pulls towards some of that East Coast and even southern demand. Illinois can pull to the river, and even, eastern Iowa straight to the Mississippi, so very sensitive. You go to northwest Iowa, then that's more representative of, western Iowa, but also southern Minnesota and the Dakotas and kind of that western part of the Corn Belt. And it's a very, very different story. You can see basis levels are just way below historic averages. And that's alarming. I mean, I know for you in some of those regions, that weak basis, that's really something, and we're talking, 20 to 25 cents below historic basis. In a year that's tight, that really makes a difference. As we shift, I'll share the screen again here as we shift gears to soybeans. But before I do, I just want to make a quick comment about basis. Basis tends to kind of be a ripple effect. Okay, so what I mean by that is if you have kind of a rising, just picture like almost like a rising tide or whatever. So let's say that basis is strong here and weak here. Typically what would happen, assuming nothing changed on the Chicago Board of Trade, is this basis won't get too high because the cost of hauling grain from here to here will keep that ratio the same. But as that basis strengthens and as there is demand, eventually that demand spreads out and you kind of see the basis level out typically. So what I would expect to see isn't necessarily that the East Coast basis or the regions with stronger basis that they would fall. You would tend to see kind of a slow reaction, but the ones in the Western Corn Belt basis kind of slowly strengthen. That's what we would typically see, especially since it's harvest. So that's just a quick comment. Now we're going to shift gears to soybeans. I want to look at the January contract, and then we're going to look at the January-March spread. It's been a while since we've looked at spreads, but I'll go over that. I know I've said this a lot of times, but it's just the soybean market is so interesting. If we just look at, if you kind of look, it's been gradually putting in higher lows basically all year. And the highs, it's not quite as pronounced. It's a little bit more stable on the highs, but soybeans have just been range-bound trade. I mean, that's just been the nature of soybeans, and everything like current trade. If we look at current trade right here, it's really just more of the same. It's not been much of a shift in direction. The big question, I think this is what, is on my mind and what makes it hard. It's kind of one of those things. It's like, let's say we have a big move in the market. They're like, man, Aaron, you should have seen that one, right? That's from my standpoint. So I'll do the pessimistic and then the optimistic, right? Pessimistic is we get this down here pressured and this market just absolutely collapses. How low though? How low could it go? Because every time it's been under 10, it's been a buy. We look here, and it hasn't even gone under 10 very recently. So how low can this bean market go? Maybe it can go lower, but I wonder, I have my doubts. What I think is more likely, and maybe this is just, farmer optimism, maybe it's a bad habit from years of farming, but I think it's more likely that bounces and we get a little Santa Claus rally. We get a little something friendly out of this market, especially if we get a hiccup out of South America. It's La Nina. Typically that's Typically, La Nina is not horrible for the Brazilian crops, but it could be. What we've seen is some of the more weather risk prone regions are Western Paraná, most of Mato Grosso do Sul and Paraguay, and then also southern Brazil, Rio Grande do Sul. But those first three that I mentioned, planting is very, very fast. So right now, everything looks great. Planting was fast. They're going to get a ton of double crop corn. Everything is great now. But if they would have a drought, since they planted early, they're going to have a decision basically. Let's say that they face bad weather, right? Not enough rain, which is typically the problem in that region. Let's say that happens later this month or first part of next month. They'll basically have a decision between saying, do I replant soybeans, which is probably what they'll do, or do I, give up on soybeans and just go straight and get my double crop corn in on time, which would reduce soybean acres. All I'm saying is there's a pretty big chunk of the country down there that has great planting, nothing bullish out of there, but they are kind of weather risk prone. And so there's just a lot of unknowns that could still happen. I just think it's more likely because of the time of year and what we have that we would get a little pop in markets. And what I would really love to see is when we get up close to over like 1080, will there be farmers selling, or will soybeans just blow through that this time? And finally, we can be out of this range where we can't ever get over $11. That's kind of what I'm watching on soybeans. Another really interesting thing is we have kind of this, if we look at January to March, this isn't new to this year, right? But January contract basically prices through the end of the year. There is not new crop available through the January contract in South America, but there is on the March. So the early harvested soybeans are available on the March contract because most of harvest starts around February. So they'll harvest basically February through March or April, depending on the region. That's the bulk of their harvest down there. But if you look at the spread between those two, so this is January minus March, so it's at -14, which means January is trading 14 cents below March. If we were to see a deal come out with China, or if we were to see any demand for U.S. soybeans, the first thing that we would see would be an indication that would grow. And it hasn't gone up, but it has plateaued. So this is something that I don't include it in the video, but I'm watching fairly closely. And that's the spread. The January-March spread is one that for me is pretty interesting. Because if we see that spread start going up, that's evidence that, oh my goodness, I need to buy some beans. There's not going to be beans in South America. Let's buy it here. It hasn't happened yet. But again, let's let the market play its hand, and then go based on that, we'll react. And that brings us to the similar basis charts of what we looked on corn. The difference is in the Eastern Corn Belt, soybean basis is on par with their historic average. But then you go to like Western, Northwestern Iowa, and again, soybean basis is just, horrible, way down there, way under historic averages. It's just really disheartening. We're talking about 30 cents, 40 cents below historic averages. That takes a toll on profitability. If you want to say, what's the problem with soybeans? The biggest problem, I think, is this right here. Just look at that basis gap. I mean, that's just evidence that there's a lot of beans out there. But what's probably going to happen, even in these years, we don't know what's going to happen, but it's probably going to go from an 80 cent under to at least, I'd be surprised if we don't get a 60 cent under. So that's 20 cents. So that's kind of a case for paying custom storage. If we could go from 80 cents under in this example to 60 cents under, and you spend less than 20 cents to hold it, then that's the case for paying custom storage. Anyhow, no action recommended. Now we'll just kind of wrap up just summarize the markets. We've gone over it, but just kind of that summary. So sharing this. Seasonally, it is a buy for corn. It is a buy for soybeans. Managed money, I'm going to go ahead and put a question mark because the truth of the matter is we don't know, right? We are flying blind and I don't like it, but it is what it is. So we don't know. If I had to guess, which I'm going to officially, it's a question mark. If I had to guess, the spec funds have not changed their position very much because the markets haven't changed very much. The trend is down for corn. I'm going to write down for beans as well, but it depends. I'm actually going to go neutral on beans because some of the contracts are in uptrends. We're going to go downtrend because they're above the 200-day moving average, but they're below the 20 days. So both corn and soybeans are right at kind of that turning point between uptrends and downtrends. Basis we talked about quite a bit in the video, but I'll say a little bit. Basis levels in parts of the eastern corn belt are similar to historic averages, but basis levels in the western corn belt are well below historic averages. I expect Western Corn Belt basis levels will increase to historic levels, but this may take several weeks or months given the big crop. There is not clarity between clarity on direction of the corn or soybean market. The amount of uncertainty due to government shutdowns, possible trade deals, Chinese demand, and South American crop risk are not making speculators too anxious to pick a side. It's a week of tremendous uncertainty. In my opinion, it's a week to just kind of let the dust settle as much as possible. If you have specific questions, feel free to reach out. But from my vantage point, it's pretty simple, right? I'm focused on Q4 bushels. We have until the end of the year to price these. U.S. farmers have a competitive advantage in logistics, cost of capital, and levels of liquidity. If you need cash flow, write basis contracts. If you don't need cash flow, fill your bins on farm. If you need cash flow, write basis contracts, assuming they'll give you some cash for it. And if you're willing to stomach some storage costs, paying storage costs till the end of the year on part of your bushels is a decision that makes sense, in my opinion. Take care of harvest, get the grain tucked away, let the dust settle. We will react to opportunities. We just really aren't having them. And if markets for some reason take just an absolute nosedive, hopefully that's an opportunity for basis to improve, and then we can get some basis work done and then circle back at the futures later. So there's a lot going on. I'm just not convinced there's a lot farmers should be doing from a sales standpoint in this environment. Hopefully you'll get a check in the mail from the government. Prices will rally. We'll turn the corner. You'll have a great crop. You'll be sitting at Thanksgiving or Christmas and in a much better situation than you are right now. But we'll just take it one week at a time. Be safe. Enjoy harvest and take care of yourself.